Meantime, natural gas prices pulling back today, even as a lingering heat wave in the U.S. boosts demand for cooling. Meantime, energy is the top performing sector so far this week, up nearly 3%. Joining us now is longtime energy trader and Skylar Capital Management founder Bill Perkins. Bill, stationary this time, not on the water. We never know where we're going to find you.
Not on the boat.
But tell me, what
Greetings from Lisbon.
Yeah, okay, great. Well, you were on a boat to get there, perhaps. Tell me what you expect in the back half of this year, even as we find ourselves in this demand situation that, well, I guess, aside from data centers, is arguably muddled.
Yeah, it's and also we're seeing competition from coal. Coal is ramping up quite a lot to compete with natural gas, but producers such as Equitrans and Chesapeake have decided, hey, prices aren't so great right now when they were trading $1.60, $1.70. We're going to delay turning these new wells online until the winter, October, November, December. And the market is going to be a little skittish because they're going to want to see that supply come back as we go into the winter. So if it doesn't come back, this market might take off like white lightning in the winter. But otherwise, it's going to be fairly muted. We're going to get pretty close to full, and things look healthy, depending on supply coming back.
Okay, is there a way that you see, I mentioned data centers, to play data center demand and this cooling demand in data centers and the impact on energy? Or is, even though it's an interesting micro trend, is it too small to affect things at the scale where you play?
I think at the natural gas level, it's too small. I think at the local utility level, where these data centers are being located, I think there's an interesting play looking at which independent system operators, where they are going, and which utilities are going to benefit from that additional load growth. And those tend to be in the Midwest and the Northeast. I think as a, buy natural gas or buy energy, I think there's too many other factors that'll muddle that. But I think for the equity guys, which I'm not one of them, I would look into the utilities that are going to really benefit from this massive infrastructure that needs to go in. Remember, they don't care how much it costs. They make a return on whatever the cost is. So I think that's the play.
Bill, it's good to see you. What's interesting to me is that if you look at the S&P 500 energy stocks that have performed the best so far this year, it's Targa Resources, it's Williams Companies, it's ONEOK, it's these midstream players that are focused on infrastructure around natural gas. So even as we've seen nat gas prices softer this year, and we do have these supply levels, the fact that the infrastructure players here, at least from a public equity standpoint, seem to be benefiting tells us what about the situation here with production versus how it meets the end user?
Oh, I have a lot to say about that, but I'll try and keep it short. These guys have a virtual monopoly provided by the government. It is impossible to build a new interstate pipeline or to add infrastructure as a new competitor or upstart. So whoever exists now, as we grow our energy supply, as we grow energy demand, they are essentially a tax on every molecule that moves, whether it be oil or natural gas. And so I think these guys are the house, and they're here to stay, and they will be profitable for quite some time.
It's interesting. You talked about it a little bit earlier, but this shift from nat gas to coal, why are we seeing that? Is it sustainable? And is there a point at which, I guess, price-wise for natural gas, we see that shift back or we see more production begin to come online?
Well, the long-term trend has been less and less coal usage, and then coal piles basically exploded. And coal power plants started deferring deliveries, reducing coal supplies. So now that the demand has showed up, they're able to burn off some of these coal supplies, take advantage of the higher prices in natural gas and power prices, and essentially run profitably. I don't expect that to last for a long time. Coal is on a multi-year way out in the United States of America, whether you agree with it or not. And this is a short-term blip in order to balance the market.